What is going on? Let's dive straight into this trade recap. All right, coming into the day, was leaning a little bearish, but we'll see what happens here. At the open, these glasses would be sliding off my face. Where's open? Open's right here. At open, we sold off pretty good on ES and NQ. We took London low on NQ. That had already been taken over on ES, so there was no longer a bullish SMT. And then an ES ended up trading lower toward the further external sell-side liquidity level, which we failed to take on NQ. So at this point, I was interested in potentially targeting back higher, and I was looking for a potential trade opportunity. But as you can see, we pumped 270 points with no retracement. And at that point, I was like, okay, up here in this price action, I was thinking, all right, we're trading, and it looks like we're wanting to draw towards a new week opening gap. So if there's some sort of long opportunity, I might be interested in having it, but this is where your boy messed up. We had a small internal bearish SMT here at just some 5-minute wick high. We see this 1-minute fair value gap get created inverse. So what do? Get involved off of it, targeting all the way back down sell-side liquidity. But there's like 2 mistakes in this trade. One, shouldn't have even taken it because, why? Because I literally said and told myself, yeah, we're probably going to want to draw higher towards the new week opening gap because we've already mitigated it on ES and haven't tapped into it yet on NQ. So at that point, I was like, okay, whatever. But then I see this mediocre short opportunity. All that formed was literally just a 1-minute inverse fair value gap. Technically, we have a little change in the state, but bro, like, why am I taking that? But it gets even worse, I guess you could say. I was originally gonna go. My fill was actually right here, so 1 to 3, but that's not happening. Targeting how many points? 225. Just because we pumped up doesn't mean we're going to retrace and sell back off. But originally was going to have the consequent encroachment of the range be my risk-free point, because with such a large displacement move up and then tapping back down into the 50% mark, which is the RFP or the mean threshold of that range, I was like, okay, I'll go risk-free here. But what did I do? I didn't go risk-free because I'm like, it's very hard to find a balance between being fearful of and going break even and then actually going break even when the chart tells you to. And this was a trade where the chart was 100% telling me to go break even, because we tapped a very high probability point that could cause price to reverse. And instead of going break even, I'm like, no, I don't want to be fearful. I'll let it run. And then what happens? We end up getting stopped out. So down, it was 260. Down 18.20 on the day. Kind of unfortunate. Could and should have had a nice winner yesterday, but it is what it is, man. And today should have been break even. So 2 break even days in a row should have been the outcome. Why wasn't it the outcome? Because I was letting emotion kind of dictate my actions, while at the same time not. Because I saw risk-free point get hit, should have been like, okay, risk-free point's hit, let's go break even and call it a day, see what happens. And then we get stopped at break even, boom, we're done the day. And again, my brain flip-flopped so much. I was interested in potentially targeting higher towards a new week opening gap. The second this internal short model forms and sits up, I want to completely target the whole sell-side drawn liquidity. So I was flip-flopping the buys too much. I should have recognized, okay, we have SMT at the low. Huge displacement up. We just tapped the 50% mark of that range. And yeah, 1000% should have gone risk-free break-even here. But was bringing in past experience with managing trades when that kind of doesn't help. It just needs to be in the moment what the trade and what the chart is telling me for the specific trade. And obviously for this specific trade, we hit this point. Harry, look at the freaking wicks, bro. Wick below it, no body goes anywhere near it. And then what do? We reverse and get stopped. So that's the main takeaway from today. Just recognize what the chart's telling me. And yeah, so down 1 trade on the week. I'm allowed to lose 3 trades a week. I'm dropping size to, this was $300 risk because I was like, you know what, I'll just risk 300, but I'm going back to max risk like 250-ish, a little more, a little less, just because maybe the fact that I was risking more made me want to be like, oh, if I catch this, it's 1,000. But a lot to learn from it. Gonna journal good here in TradeZilla, but gonna move on, learn from it, get on about my day. Got a little math test going on. So that's all I got. Thanks for watching. Let me know how you guys did today, what happened, what you were thinking, how you saw price action, and yeah, drop a comment, subscribe if you haven't already, and I will see you guys tomorrow. Peace.